Good afternoon, and thank you for joining us today. My name is Tim Lee. I'm a research analyst here at Red Cloud Securities. I'm delighted to host a Red Cloud webinar on gold production and development today. We'll hear from Tim Warman, CEO of Fiore Gold. During today's webinar, he will provide an overview and outlook. Then we will take questions. You can type your questions into the chat box at any time. We will get to as many as we can. Before we kick things off, first we need to discuss the fine print. During this Fiore webinar, forward-looking statements may be made. I would direct listeners to the company's forward-looking statements outlined on page 2 of the Fiore corporate presentation that can be found on the company's website, fioregold.com. For Red Cloud Securities, Inc., I would highlight that this webinar is for informational purposes only. It should not be considered a solicitation or recommendation to buy or sell securities. We note that this call does not consider the particular situation or needs of individual investors. Participants should rely on their own investigation and seek their own professional advice before investing. Please see our most recent research located on the Red Cloud website for specific disclosures on Fiore Gold. So we have Fiore presenting today. The company is a growing gold producer, building on the foundation of its operating Pan heap leach mine in Nevada. The company also has the Gold Rock development stage project located near Pan, and the recently acquired Illapa Gold project, also in Nevada, as well as the Golden Eagle project in Washington State. With that, I will now turn it over to Tim to update our audience on the company.
Great, thanks, Tim, and thanks everyone for your time today. As Tim mentioned, I'm Tim Warman. I'm the CEO of Fiore Gold. I'll just jump through this. So some of you may be familiar. We are a US-based mining, development, and exploration company. We have our main focus on Nevada. And for those of you who aren't aware, Nevada is the top mining destination, certainly in the US. And according to the Fraser Institute survey this year, it's the top global mining jurisdiction. If it was a country, it would be the 5th largest global gold producer. We have 3 projects there. We have the Pan mine, which is our producing mine. We have the Gold Rock project, which is right next door, 8 miles away. It's federally permitted, and we're actually starting to do some of the state permits in conjunction with our feasibility study that's underway right now. And then just recently, we picked up a 3rd project called Illapa, which is about 20 kilometers down the road along Highway 50. It's an exploration stage project that we got, we think, for a very reasonable price, and we're looking forward to getting out with our geologists and our drills and testing that property. We also, as part of the original Pan and Gold Rock acquisition, picked up another property in Washington State. This one is called Golden Eagle, and it's in the former Republic, or in the current, I guess, Republic mining district, which was probably the most prolific gold producing district in Washington. It produced just under 3 million ounces over about a 100-year history. Golden Eagle has a 43-101 compliant 2 million ounce gold resource. It's measured and indicated, so it's a very high quality resource. We have some thoughts about how to proceed with that one. Really, the focus right now is on our Nevada projects. And really, our goal right now, we are a sub 50,000 ounce producer. We're guiding to produce just under 50,000 ounces in gold this year, as we did last year. But we have a plan to grow the company. We think it's a pretty good one. We would like to become so interestingly, right now, if you're looking for 100% domestic US gold production, we are the largest publicly traded company in that regard, in terms of the size of our gold production. All the other larger gold producers in the US have significant exposure to, Central America or Papua New Guinea or West Africa or, all kinds of other places. We are exclusively a US producer. And our plan to grow that really revolves around Pan, keeping that kind of base production in that sort of 45 to 50,000 ounce range, with a few ideas to maybe kick that up a little over 50,000 ounces. And we'll talk about it a bit later. Assuming Gold Rock, the next project next door, begins production as planned, and we're aiming to have that in production in 2024, that would take our Nevada gold production more than double it, take us up over 100,000 ounces a year. And of course, we're always looking for acquisitions, ideally producing assets, that would further add to production. Ideally, we'd be looking for something in that kind of similar size range, that 50 to 100,000 ounce, range. And that growth profile really would I think kick us up into the sort of size that you need for things like inclusion on the GDXJ, to get more institutional investors, to get better liquidity, and really to get a bit of a re-rate in terms of valuation. I think we're pretty cheaply, trading pretty cheaply right now. I'm a junior mining CEO, I have to say that, but I think we can demonstrate that pretty easily. I'll just talk quickly about our Pan mine. This is our producing asset. It's a typical open pit heap leach operation in Nevada. You can see a shot from above here looking to the east. The mineralization is controlled by this dotted yellow line here, the Branham Fault. We mine from two areas along the fault. Here, the north pit in the north. Here's the south pit in the south, as they should be. And we mine from both those pits, and we bring the ore, truck it into this area here where we have a crushing circuit. We crush the ore, and then we stack it on the leach pad here. And then the leach solution flows into the ADR plant down here, and we produce gold doré on site. It's almost exclusively a gold project. We don't produce any silver of any note, no copper, no other real byproducts. It's a pure gold mine. Very, very solid operating team there. They've been able to take what's relatively a small and not super high grade mine and generate some solid operating results and solid financial results, which I'll talk about in a little bit. Also, a very safe mine. In January, we surpassed 1 million hours worked without a lost time injury. Unfortunately, we've since had a lost time injury. It was a relatively minor one, but it still counts. And so we are doubling down on our safety focus on the project. Just looking at the sort of, the stats, the financial stats from it, you can see in 2019, we produced just over 40,000 ounces. In 2020, last year, 46,000 ounces. And we'll produce somewhat similar again this year. All-in sustaining costs around $1,100 last year. They'll be a little higher this year as we see a slightly higher strip ratio. And also, we're seeing some cost pressures like everyone is out there in the mining industry, but particularly in Nevada, where people are very, very hard to come by. And so that's pushing wage rates up a little bit. One of the great things about Pan, though, is with that nice solid production and with decent gold prices lately, you can see the operating cash flow, $24 million, adjusted net earnings, $17.5 million in 2020. On a per share basis, that's 24 cents, and these are US dollars, 24 cents per share, cash flow, 18 cents per share, EPS. And if you think about that, we're trading at about $80 million right now. So we're trading at roughly, less than 4 times cash flow. And about 4 times EPS right now. So again, this goes back to my point that I think we're a relatively cheap company right now. Guidance for next year is very similar production profile, similar costs. AISC will be a little bit higher this year, and keep in mind that our fiscal year ends at the end of September. So we're actually in our fiscal Q4 right now. The biggest difference between last year and this year is this year we're going to be spending about $20 million on non-sustaining, essentially growth capital to help grow the business. About $10 million of that is at Pan. We had to expand the leach pad to accommodate an increase in the resources and reserves, which we published in December of last year. So obviously now we needed some place to process that ore, which is a very good problem to have. So that'll be about $10 million. That's actually just wrapping up. We're a couple of weeks away from finishing that project, and we're already stacking ore and leaching ore on the new part of the leach pad. And that's generating some very nice gold production, particularly in the current quarter, our Q4. The other $10 million is being spent next door on our Gold Rock property. We're moving that project through feasibility right now. We're doing about 60,000 meters about 60,000 feet of drilling. This is about 20,000 meters of new drilling there as part of the feasibility study to grow the resource and do geotechnical drilling and condemnation drilling and a whole bunch of other things, and various other studies as well. So that's all growth capital, really looking to grow the company with that. And the great thing about Pan is it's able to generate enough cash to fund all of those growth activities as well. We're debt free. We haven't raised equity since 2017. And really, it means that we've been very kind to our shareholders and haven't diluted them. I won't promise that we're going to do that forever. We may have to go to the market to raise equity, particularly to build Gold Rock, but that's down the road a ways. Just talk one last slide about Pan. One of the things about Pan is it's got a lot of targets that are available for drilling there to continue to grow and extend the mine life there. So one of the things we're very proud of is, typically we'll spend between $1 and $2 million a year on drilling, and that's really aimed at resource and reserve replacement, making sure that we continue to replace all of the ore that we mined in the previous year, and we've been very successful at that. If you look at the measured and indicated resources here in orange, and the proven and probable reserves in blue, you'll see that, I'll just switch on my little marker here in 2017, and then again in 2018, and then again in 2020. With that $1.5 million to $2 million spend, we've been able to keep that resource and reserve constant and replace virtually every ounce and every ton we've mined. And there's a lot of targets left to test here. And in fact, one of the things we're really keen on this year is, now that we've got that $10 million spend on the leach pad behind us, we want to go out and spend a little bit more money on exploration. So we're looking at, maybe rather than $1.5 million to $2 million a year, we want to get out and test some of these targets in a big way, maybe spending $3, $4, $5 million on exploration out here. We're still putting those budgets together right now. But again, we've got a track record of reserve replacement. There's great regional exploration potential. And two other things we're working on right now. One is increasing the mining rate to 17,000 tons per day. The mine is permitted to 17,000 tons a day. Right now, we are mining at 14,000 tons a day. So you can see we've got room to grow there by about 15%. We're also looking at doing secondary crushing and on-pad stacking to lower costs and to increase the gold recoveries. I'll just turn now to Gold Rock. This is the growth project. It's 8 miles away from Pan. Pan would sit just in that low range of hills here in the background. And as I say, about 8 miles away as the crow flies. There's a small open pit there left over from mining operations in the late 1980s and early 1990s. All the reclamation is done. There's no liability there. The site's been completely rehabilitated. But what this does is it gives us a really nice view of the mineralization. And so if you look at the back wall of the pit, you see this pinkish, reddish material here. That is the mineralization. That's where the resource is hosted. That's where the gold is hosted. And it's part of a structure that's essentially a fold in the rock. So if you were to look at this in cross section, it would go up and down over like that. And that fold is like a ruck that you get in a carpet when you kick it and sort of bump up a ridge in the carpet. And that ridge extends for about 20 kilometers through the site. So there's a lot of potential to continue to drill. And you can actually see, here's Gold Rock. Here's Gold Rock here. This is that ridge that I talked about. And that trend just carries on through the area. It hits the border with what we call our Eland claims. It seems to stop. That's just because we picked up these Eland claims later. We don't know what's out here. There's no reason to think it stops at a claim boundary. We suspect it continues to carry on like this, but of course that's got to be tested with geological prospecting and drilling and whatnot. But we think it's a particularly prospective area. You can see Pan over here. The areas in red are the drilled out resources and reserves. The same at Gold Rock. The areas in yellow are all the exploration targets. And you can see that just with what's drilled out to date and with what's been mined to date at Pan, we're well north of 1 million ounces in total resources there between those two deposits. So these are, even though you might look at them and think, well, 400,000 ounces, that's relatively small. Together we've got, well north of 1 million ounces in total resource, if you include what's mined out already by us. What else can I say? Gold Rock, we are working ahead on the feasibility study there. We put out a PEA last year on that. The PEA results at $1,700 gold, 56,000 ounces average annual gold production, 6.5-year mine life, $65 million initial capital, and just under 100 million post-tax NPV. So some pretty decent looking economics there, and we think those are going to look better as we go through the current feasibility study. One of the things that we're doing as part of the feasibility study is a lot of drilling. As I mentioned here, there's something like 20,000 meters or about 60,000 feet of new drilling there. And some of the latest drilling that came in from the north end of the pit here, the average grade at Gold Rock is about 0.7 to 0.8 grams per ton. But if you look at some of these drill holes coming in from the north end, just beyond the north end of where we've defined the deposit here, 48.8 meters at over 2 grams, 32 meters at 1.4 grams, 38 meters at 1.1 grams. Some really interesting high-grade stuff up there. So we're quite keen to get back in. We've got drills turning again on site here. We're also doing more metallurgical testing up there to see if this higher-grade stuff looks any different metallurgically. We've got 16 large diameter PQ metallurgical holes in at the metallurgical laboratories. They've been in there for a couple of months now. And so all the feasibility level metallurgical testing is underway, and all that will flow into the feasibility study, which we intend to publish in Q1 of next year, so Q1 of 2022. And really, we see Gold Rock as a pretty low risk expansion in effect to Pan. It's right next door. It's going to use some of the infrastructure that already exists at Pan, so it'll use the same access road. We've already pushed that access road down into Gold Rock. The power line for Pan comes in here from the west, and this yellow line goes up to Pan. We'll extend that down to Gold Rock. It's only about 4 miles to extend that into Gold Rock, so it's very close. We'll use a lot of the same people to run both mines. We'll have the same mine general manager, the same mining manager, same process manager. And really the two mines are essentially cookie cutter carbon copies of each other. Open pit, heap leach operations. We may look to see if we can process some of the carbon up at the ADR plant at Pan. We'll certainly use the assay lab up at Pan. And really, because of all of these things, we think it's pretty low risk. It's got higher grade than Gold Rock. It's got a team in place, pretty low initial capital. There's existing infrastructure. We've already got our federal permits, which are the hard ones to get. And as I mentioned, we've already started on some of the state permitting along with the feasibility study. The whole goal of the company is to get this into production in the first half of 2024. Now, obviously, that's going to depend on a positive feasibility study and all the other qualifiers that need to go along with this, but that's what we're working towards right now. And once you get there, you've more than doubled gold production in Nevada. And I'll just talk briefly about exploration potential, because one of the things that, we spent a lot of time over the last sort of 2 years looking for another producing asset that we can add to the Pan mine, sort of fill the gap before Gold Rock comes on stream. And we're realizing it's tough to find good money-making mines out there. There's you can see, just look at the news and the mining research, you can see a lot of open pit heap leach type operations in Nevada that have run into trouble, in the past little while. And really Pan almost stands out as an exception to that rule. It's a well-run, profitable business that doesn't really hit any major hiccups, and if it does, we solve them quite quickly and calmly. So we've decided to focus more in on exploration. So not only do we have a big exploration program planned for Pan and Gold Rock, but we've also picked up the Illiput project up here. We now have over 55,000 acres in our Nevada land package, and we're planning to aggressively explore those as well. We've got people up here mapping Illiput already. We just closed the acquisition about 2 weeks ago. It's right on Highway 50, so super easy access. There's a former open pit up there that produced, relatively modest amount. I think it produced 35 or 40,000 ounces back in the 80s before it closed. But the geology up at Illiput is virtually identical to the geology down here at Pan and Gold Rock. Same geologic formations, same kind of structures, same faulting, all the same, geochemical associations with the mineralization up here. So we're pretty excited to take what we've learned about the controls on mineralization down here at Pan and Gold Rock and apply those to, up at Illiput. I'll just talk briefly about Golden Eagle. So Golden Eagle, as I said, is up in Washington State. It's just outside the town of Republic. It's a relatively small property, but within it, there's 2 million ounces of measured and indicated resource. It's open pittable. The only issue to it is that because the land package is relatively constrained, in order to put an open pit about it, and this is quite clearly detailed in the PEA in the resource technical report on the project, we would have to push the edges of the pit into the adjacent ground, and that adjacent ground is controlled by Hecla. And we've had ongoing discussions with Hecla about coming to some kind of agreement there. They have told us that they're drilling on the adjacent property, that they've sort of seen sight to potentially 2 million ounces on their side of the property. There's been almost 3 million ounces of historical production here, mostly from underground. There have been a few small open pits, but really hasn't been approached from an open pit perspective before from a large mining potential. I would note that the last two mines in the area, Kettle River and Buckhorn, they just closed in 2019. Kinross put those on care and maintenance, and Kinross has told us they're spending $30 million drilling in and around Kettle River with an eye to reopening that mine as well. So there's a lot of new interest in this area. Hochschild has got an exploration JV with a small junior up to the north of us here. And Hecla, of course, is doing a lot of work in the area as well. So lots going on here. Obviously this is at a very early stage, but it's a very large deposit. One of the great things about it is the holding costs are minimal. It costs us about $10,000 a year to hang on to this property. Why do we think it's got great, potential? Well, right now I think we're getting zero value in the company for that because we're not doing anything with it, because we really need access to that ground that Hec controls. However, if we can get that, if we can move this thing forward, I think, there's real value to be unlocked, because right now Golden Eagle is about the same size as Integra Resources' DeLamar project in next neighboring Idaho. And DeLamar right now, based on that one single project at a similar stage, pre-permitting, pre-feasibility, Integra's built about a $250 million Canadian market cap company off of that one asset. So we think if we can start to unlock some of the value in Golden Eagle, we can start to add additional value to the company as well. But again, it's going to take an agreement with Hecla. Fortunately, it doesn't cost us a lot to hang on to this property. There's no clock ticking. This is one thing we're really proud of, capital structure of the company. and the balance sheet. 100 million shares outstanding. That's virtually unchanged since 2017 when we put these companies together to form Fiore Gold. We issued a few more shares just recently as part of that ILPA acquisition. We think that's a good use of our equity. 8.1 million options, RSUs, DSUs, 108 million shares, fully diluted, very little potential overhang here. 82 million US market capitalization as of yesterday, no debt, and $18.5 million on the balance sheet. And that's despite spending heavily on exploration at Pan, leach pad expansion at Pan, exploration and feasibility studies at Gold Rock. We're able to cover all of that and still add some cash to the balance sheet in this last quarter. You can see analyst coverage here, including Red Cloud. Solid performance. I mean, we've kind of tracked the GDXJ, to be honest, and we've seen a lot of weakness just in gold stocks generally, but we definitely have not, we've actually outperformed the GDXJ recently by ever so slightly. But I think, overall, as we grow the company, we can start to outperform it, because if you look at a lot of the valuations on some of our peer companies that are a little bigger than us, that have more than one asset, and of course, there's always a discount for single asset producers. As you grow, you really start to get that re-rating in terms of your PNAV or price to cash flow, because as I say, we think we're pretty cheap right now. So just a quick summary. We've always really focused on our operations, on trying to under-promise and over-deliver, and I think we've been pretty successful at that. We took a bankrupt mine, and just for those of you who aren't familiar with the story, we picked up Golden Eagle, Gold Rock, and the Pan mine back in 2016 for $5 million in cash. And last year that mine generated 24 million in operating cash flow, so it was a pretty good deal. But we took that bankrupt mine and successfully ramped it up, turned it around, and got it generating cash flow. We put a crushing circuit in without taking on debt. We've updated the reserves and resources several times now. We got our next project permitted. We've got a PEA out, resource update. We're into the feasibility study on that. Golden Eagle now has a current resource. We've acquired ILPA. So what's coming up over the next year? Well, lots of drilling at Pan and at Gold Rock. We're currently drilling there right now. Gold Rock feasibility studies, we'll have MET studies out. We should have some of the preliminary results for that in the fall. Gold Rock regional exploration, and then perhaps some M&A activity as well as we look to grow the company. And I'll just leave it there with a nice picture of the Pan mine. And I'm happy to answer any questions.
Great. Thank you, Tim, for a very informative presentation. We'll now start the Q&A portion of this webinar. Reminder to everyone on the line that you can type your questions into the chat box at any time. We already do have a few questions submitted. First, how do you plan on paying for Gold Rock development?
Yeah, so Gold Rock, as you noted there, the PEA capex on it is around $65 million. So it's a pretty reasonable capex relative to the $100 million NPV on it. And look, we're going to pay for some of it out of our own cash, but Pan doesn't generate that much cash that we can afford to build the mine out of the cash flow. So we'd probably be looking at a sort of typical debt equity package. And one of the things we're quite confident in being able to get a decent financing, project finance package for that is that, from a lender's perspective, it's a pretty low risk property. You've got a cash producing asset right next door. You're building something that looks exactly like your cash producing asset 8 miles away in an awesome jurisdiction. And sounds like an emergency there. And so we're pretty confident that with all those things going for it, it's going to be relatively straightforward to get project finance for that.
Great. And then along the similar lines, when do you think Gold Rock would have first gold production?
Yeah, so obviously we're still in the feasibility stage right now, and I have to use some caution around how we talk about guidance from a PEA. But our plan, and of course this assumes that we're going to get a positive feasibility, which I'm pretty confident about, would have us starting construction sometime in early 2023 and gold production in 2024.
Right. And this is kind of projecting forward, but obviously you're a profitable producer now. When do you think Fiore will start paying a dividend?
I think we want to make sure that we have more than one asset. We're still in the growth phase right now. I do want to get to a dividend paying stage, but it really needs to stabilize that production. There's nothing worse. The only thing worse than not paying a dividend is having to stop paying a dividend. And so, as I say, we need to grow a bit. We need to get more than one asset in there. But yeah, at some point down the road, I can't promise anything right now, but I would say, this is the growth phase of the company.
Right. looking at the exploration side, what is your budget for exploration for the next year?
So we're actually in the budgeting phase right now with the company. So we're going through right now. We present our budget to the board in September before our year end. And but I think we're probably looking at somewhere in the sort of $10 million range right now, just roughly. That's between Pan, Gold Rock, and Illapel.
And how long would it take to bring new discoveries around Pan into production? For example, the Mustang target.
Yeah, so Mustang's the one we're going to be testing first. So it was one of those regional targets. It's the only one we've actually drilled, and we put about 8 holes into it last year. About 5 of those holes hit. So we'll go back this year. That'll be one of the priority targets to go in and try and infill that drilling and expand it to see how big is that target, get the drill density up where we can bring it into the resources and the reserves. One of the things about these kind of regional targets around Pan is it kind of depends how far away from Pan it is. If it's within our fence line, the permitting is relatively straightforward. We just have to do a modification, that says, look, we're going to open up another pit within our already permitted footprint. As you start to get a bit further away from the mine, the permitting timeline is a little longer. You're probably looking at a year to 18 months. Again, giving you a firm permitting timeline with any government permitting agency is always challenging. But yeah, I mean, expanding an existing mine is a lot easier than trying to permit a new mine. And particularly, we've never had an environmental citation. And we've had, I think, one, we might even have 2 LTIs in the history of the mine. So we are definitely not the problem children when it comes to the regulators and the permitting agencies. So I think we've built a level of trust there that hopefully will serve us well as we go through the permitting process. But of course, it's tough to predict. But I think you could see those projects coming in sequence. As the current north and south pits start to get exhausted, we'd move on to those areas.
And we actually did have 2 questions kind of following up on that. Are you in the process of permitting any new areas? And are there any permits you were worried about getting and timing concerns?
Yeah, no, not really. Right now at Gold Rock, as I said, we've already started the state permitting process there. State permits are relatively straightforward. Mining's in Nevada. Nevada is a mining state. The regulators know mining. They're used to mining. We don't have to explain to them what mining is. So, and they've had good experiences dealing with us in the past. So, I think we've been pretty quick at permitting things there. Could that change? Yeah, I mean, things can always change going forward, but we don't see anything that's of concern right now. We will start to permit some of the early permits at Pan, but we don't have those areas drilled out to reserve status. So we really need to get to that point first and say, well, this is how big the pit is going to be before we start permitting it.
And a question back on the exploration side. How's the cost of exploration at the moment?
Yeah, it's it's not so much the cost that's going up. It's hard to get drills right now. It was funny because a year ago we actually had to pause our drilling campaign because the assay labs were swamped and they couldn't do the turnaround quickly enough. I mean, you really need sort of 4 or 5 week turnaround on assays to keep a drilling program going. We were seeing upwards of 10 weeks, and you just can't do that. So now the assay labs have expanded their capacity, and now you can't find a drill. So we've been fortunately, we're a very good customer. So the drillers like to work for us. They know they're going to get their bills paid, and that we have lots of drilling to do. So they have made drills available. We don't have as many drills as we'd like, and we're constantly beating the bushes and looking around for more drills. That's the biggest challenge right now.
And a question back looking at Golden Eagle. It says Crown and Kinross has a legal problem related to environment at its Kettle River mine. You said they're going to spend money there. If you do a deal, how will you avoid any liability?
Well, I mean, I think at Golden Eagle itself, there are no liabilities there. The site's been completely rehabilitated. If we were going to do some kind of a deal with Hecla and or Kinross, the goal there would be that they would be the operators. They're much bigger companies than we are. They know the area. They've got established operations in the area. It doesn't make sense for us who are really Nevada-based to go up there and operate it. So, we would basically let them take that on. Obviously, we don't want to bring in any liabilities that would attach to us. And I noticed there that it says spend $3 million. They actually spend $30 million is what they're spending on drilling there. So they're obviously pretty confident that they can deal with that. Kinross owns about 6% Fiore, or actually about 5% now. So we talk to them fairly regularly. I mean, Washington is a more challenging state to permit in. There's just no question about it. It's not Nevada. So Golden Eagle is definitely a longer dated company, a longer dated project than something would be in Nevada.
Great. And I guess kind of along the lines of deals, with the market pullback, particularly for juniors this summer, are there opportunities for acquisitions opening up?
Yeah, I suppose you could say that, but the problem is, of course, that everybody's pulled back, so it's not as though we're suddenly more highly valued than a lot of these other guys are. It's sort of like a rising tide lifts all boat, and a sinking tide takes all boats down with it. So anyway, that's probably the biggest challenge right now. I think our biggest way to get out of this kind of value trap, if you like it, is to grow the company. I mean, we've built a really good base. We've got a solid balance sheet. We can take on other assets. We're not putting the company at risk. And we know what we're doing. We're not going to get into trouble. And that's one of the things. Like, we avoided a lot of we've avoided projects like Relief Canyon. We've avoided projects like Florida Canyon because we just looked at them and went, we don't think we can operate those things properly and make money at them. And I think those were sound decisions at the time. I mean, sometimes the best deal is the one you don't do.
Great. And I guess one kind of summary question here, just to kind of review, what news would we expect to have over the coming weeks and months from Fiore?
Yeah. So obviously we're a producing company, so we'll have our quarterly financials out in a couple of weeks. I think they're in last week of August. They'll be coming out. Beyond that, we'll have drill results out. Those will probably be a few more weeks away, probably in September, before we get enough back from the assay labs. We've got some metallurgical testing. Some of that test work results should come out in the sort of October-ish timeframe. We're going to double check the schedule on that, but that seems about right. Looking at recoveries and all the rest of the reagent consumptions and all the good things that go into the feasibility study for Gold Rock. We'll have some drilling at Pan, although that'll come a little bit later in the year as we do our next drill campaign there. And then hopefully some exploration news from Illipah. Now, we won't get drilling at Illipah for a little while because Illipah hasn't had any drilling or any work done on it, for years and years and years. So they don't have any open permits there. We have to get what's called a plan of ops for exploration drilling there. That's about an 8-month process, roughly. So probably be looking at the spring before we start drilling at Illipah. But we've got people on the ground there just trying to help us understand the geology a little better as well. So
great. And is Illipah exploration kind of run out of the Pan office?
Yeah, it's literally a half-hour drive down the road. That project was such a no-brainer. I mean, it was cheap. We paid $1.5 million for it, and 1.3 million of that was in our shares. So there was very low cash. It has no royalty on it, which is incredible. I mean, the idea of a Nevada property with no royalty already on it is almost unheard of. So that's that was kind of great, and it's just down the road. So.
Actually, one quick question submitted along those lines: is Illipah Forest Service land?
I don't believe so. I think it's all BLM land.
Question along a different line, but is any hedging in your mind?
No. So we have in our history hedged at one point when we had a major capital expenditure to fund, and that was the new crushing circuit. And the gold price was a little more uncertain, and our balance sheet wasn't in the shape it is in now. We didn't have as much cash on the balance sheet, and so we did some hedging there, partial hedging that was really designed to make sure that we were able to fund that capital expenditure as we put that new crushing circuit in. If we had a really big capital expenditure, and the next one is likely to be something like Gold Rock, we might hedge a portion. It might even be required as part of the finance package. But generally, we use it only kind of tactically. We don't see hedging as something that people want from a gold producer.
Great. And one circling back on the exploration side, I think I addressed this, but are you drilling right now on projects?
Yeah, I think we have one drill turning at, we did some drilling a couple of weeks ago. The drills, we actually goes back to how hard it is to get drills. We lost those drills, and now we've got replacement drills in turning. So yeah, we have one drill turning right now. The other one I think is coming in tomorrow. So we'll have 2 drills turning, and then we're going to keep adding any drill we can get to that project. They're drilling at Gold Rock right now.
Great.
Yeah. So we should have lots of drill results coming out. You know, we're basically, every drill we grab, it's never leaving our property again. It's going to keep drilling, and we'll have lots of drill results coming out over the next 6 months. A pretty steady stream.
Great. I guess one question I would ask, kind of following up on that, is that stepping out to the north, because there had been some interesting results there, or is it kind of multiple spots?
So we've got a couple things to do. There's a few areas where our modelers have said, you know what, if you stuck 2 more holes in here, we could probably bring that into the resource. And so, okay, let's go do that. You know, it's really just picking around the edges, but really going north looks pretty neat. You know, that high grade stuff up there, you know, it's deeper. I'll caution people about that. You know, they kind of put the strip ratio up, but at, you know, 1.5 and 2 grams, you can carry a lot of strip ratio. And what's interesting is, as you go north of that, about a mile, the mineralization comes back to surface again at a place called Jasperoid Creek, where we also got some interesting hits as well. So we'll start to tie those 2 together. So we've got about a mile-long gap in there where we've got mineralization at one end, mineralization at the other end, and then we need to kind of bring those 2 distal points back towards each other.
Yeah.
So.
Is that all kind of developable? Is there any topography there, or any concerns about anything in between there? Or is it just
it's the ground is pretty similar all through that area out there.
Great. Then we just had a question that's more back on the exploration side, kind of an interesting one. But which geochem and geophysical tools work well at Pan and Gold Rock?
Yeah, so geophysics, it's funny. In Nevada, you don't see geophysics being used all that often, and I think some of that is just the exploration culture there. Some of it is that the mineralization isn't really geophysically different than the rocks around it. You know, it's tough to pick up silicification in sedimentary rocks that are made of silica. So it doesn't really work that way. I'm sorry, I'm a geologist, so I'm going to get too technical here. From a geochem perspective, we do see some really interesting stuff with geochem. We're doing some really interesting stuff in terms of this funky new multivariate statistics that you can do to try and, sort of fingerprint your ore types and fingerprint your deposit types. So geochem probably works a lot better than geophysics. We might actually fly some mag surveys just to get a better picture of the regional structure and see if we see anything on that. But it's not something that's going to, sort of vector you into a gold deposit. Great.
All right. Well, I think that's all the questions we had for now. I'd love to thank Tim Warman from Fiore for presenting today, and thank you everyone out there for tuning in and for your excellent questions today. Just a reminder that Red Cloud Securities will be back tomorrow afternoon when our webinar series continues with Global Atomic presenting Wednesday, August 18th at 2 p.m. Eastern Time. And have a great rest of your day.
Thanks, everyone.